What is going on, guys? Today we're going to go over a quick lesson. The lesson is going to be the importance of looking at multiple time frames. We're going to look at this example with ISNS. The past 2 days, the stock went on a nice little squeeze, ripping up up over a dollar for 2 days straight now. From 550, ripping up to 7, and then from down here at 6, ripping up $2 to $8. Why did it run into $8 though, and why did it stop right there? ISNS, let's look at the float real quick. So it's a low float stock at 4 million. That means there's not much supply out there of this stock. And you have to look at the float and volume. The stock market is all revolved around supply and demand. So if you have a low supply of something and a lightning bolt of volume hits that stock, the prices are going to shoot up. This is why low float stocks can be easily manipulated, and why you see a lot of trading gurus out here in the stock market. They always preach and talk about, and you will see them trade a lot of times, low float stocks. And for me, I love trading low float stocks. The price movement on them move up and down really fast and violently. If you really train yourself on how to take advantage of these charts with low float stocks, you could make good money without putting up a lot of capital. A stock ripping up $2 like this, from $6 up to $8, even buying 1,000 shares at $6, that's $6,000 investment, and it shoots up $2. That's a $2,000 return on your $6,000 investment. You just made a third of your money. That's pretty good. But back to the story, the importance of looking at multiple time frames. Why did ISNS top out at $8? Well, let's look at the daily chart. Here's the daily chart. We'll make this bigger. We can zoom out on this. We see there's no resistance at all to the left of this chart at $8. But if we zoom out on this bad boy, we can go way back here to $8. The last time it was up and above $8 was right here back in 2014. So this is a multi-year breakout, or an area it's testing. It hasn't seen $8 in multiple years. It's currently 2021. This stock hasn't hit 8 since 2014. That's 7 years. So a multi-year touch here. So all we simply got to do is move up on a time frame. We look from a daily to a weekly chart. Still, I don't see anything here. Nothing's really going on. We do have maybe a potential squeeze forming here with the moving averages. But let's move up one more time frame. We're going to take a look at the monthly time frame. And would you look at that? On the monthly time frame here, every single candle is 1 month. And with the moving averages here, this red line is the 200-day moving average. Now going back, we're using these moving averages, the 50-day, the 200-day moving averages on our daily charts, because any free website you go to that offers free charts, the default settings on most of them are going to have the 50-day and the 200-day. Those are the most popular moving averages, period. Those are the most popular ones that everybody likes to use. So I want to see and use what everybody else is seeing and using. And look at that with this red line. It's right at $8. And you could see with this wick here, the stock came right up to it, got denied, and right back down it went. This is the power of looking at multiple time frames. The bigger the time frame you see something like this, the stronger it's going to be. So seeing that this 200-day moving average is on the monthly chart, that's going to be like the ultimate boss for this stock. It's going to have such a hard time getting above that level. So it's not even worth it trying to battle it. What you want to try to do as a trader, you want to listen to what the charts are telling you. Look back and see what these charts are doing to help prepare for the future and guide the stock for the future. Most of the time, I'm not really trying to predict what future moves could be. I'm simply always trying to look back, and I'm using history. I consider myself a glorified history buff. I'm looking back at the history, looking at the personality of the stock to help try to see what potential this stock has and what it could do. So that's the importance of looking at multiple time frames. Always start looking at the biggest time frame and work your way down. The bigger time frame you see a setup, the bigger that move is going to be. If you see a moving average breakout on a monthly time frame, but you're not seeing it on a daily time frame, on that monthly time frame, that's going to be a huge move. Because remember, there are multiple traders out there in the stock market who have multiple different trading strategies. You have traders out there that strictly only trade on the 1 minute time frame. You have traders out there that strictly only trade on a 10-minute time frame. Same thing for a 30-minute time frame, an hourly chart, a 4-hour chart. Swing traders and long-term investors like to use daily charts for their swing trades. They'll look at weekly charts and monthly charts. So there's all different types of strategies, investors, and personalities out there. So you want to understand and see what everybody else is seeing, if that makes sense. I hope you guys enjoyed this video, and this is on the topic, the importance of looking at multiple time frames. And the bigger the time frame, the bigger the reasoning is. This is Mr. Wolf. Keep studying, have that patience, have that discipline, and study, study, study.